Hello and welcome. We're about to unpack a huge move in the global financial world, one that could really change the way you think about trading with and investing in China.
Look, we all know it's crucial to know China to do better business. You've got to save time and money with real expert insights, right? So welcome to our channel, Trade with China. Today, we are going to break down a major financial move by China and what it actually means for you. Okay, so let's get right into it. It all starts with a recent event, a really significant one, that's signaling a much bigger strategic shift for anyone who's involved in global finance. So what happened? Well, China's Ministry of Finance just issued a massive $40 billion in US dollar sovereign bonds, and they did it right in the heart of Hong Kong's financial market. Now, this wasn't just another Tuesday at the office. This was a really clear statement of intent.
And you know what? The market's reaction was, frankly, a feeding frenzy. The demand was just incredible. You had global investors placing orders for nearly 30 times the amount of bonds that were even available. That's not just interest, my friends. That is a massive vote of confidence.
Now, let's look at the specifics here, because this is where it gets really interesting. The crucial thing to see is that the coupon rates, the yields, are right in line with US Treasury bonds. So why does that matter? Well, it means these bonds are playing in the same league. They're on a level playing field, which makes them a super competitive and really attractive alternative for international investors. So you might be asking, why does a successful bond sale matter so much? Great question, because this is about way more than just raising money. This is a very deliberate move to build a whole new piece of financial architecture, right inside the existing global system. To really get this strategy here, we need to quickly talk about something called the sovereign yield curve. In simple terms, think of it as the master price list for money. It's the benchmark that sets the interest rate for pretty much everything else, from giant corporate bonds all the way down to home loans. It's the foundation. And this slide, this gets right to the heart of the matter. You see, for decades, the US Federal Reserve has basically set the rules for pricing any debt in US dollars. But this bond sale, it introduces a powerful new alternative. That plug-in idea is perfect. It works within the dollar system we all know, but it gives China a whole lot more control and independence from US monetary policy. So this huge bond sale is sort of the public face of the strategy, but it's not happening in a vacuum. Not at all. It's actually just one part of a much bigger, multi-pronged plan to boost China's financial resilience and its influence. Let's zoom out and look at that bigger picture. You can think of this whole strategy as a four-part puzzle, and that bond sale is just one piece. The other pillars are just as important. First up, the Hong Kong gold vault. That makes physical gold reserves way easier to access and trade. Second, they're encouraging other central banks to store gold there, which builds a new hub of trust. Third, pushing to settle big commodity trades in their own currency. That's a huge move to chip away at the dollar's dominance. And finally, building up Shanghai as a major gold pricing hub to rival London and New York. You see, each pillar is designed to build a more independent and sturdy financial system. All right, so we've covered the event itself and the broader strategy behind it. Now, we get to the most important part. What does any of this actually mean for your business, your trades, and your investments?
Yeah, this isn't just some theory for economists to debate in a classroom. These are real-world developments with direct, practical implications for anyone trading with, investing in, or even just analyzing the Chinese market. It's really time to connect these dots back to your own portfolio.
So, what should you really take away from all this? First, you've now got a new reliable benchmark for pricing Chinese corporate debt, which could make investing there less risky and more predictable. Second, Hong Kong's role as that critical financial gateway, well, it just got a major upgrade. And finally, that overwhelming demand for the bonds sends a crystal clear signal of strong investor confidence, and that could point to some brand new opportunities in the region. And that leaves us with one final, really critical thought. These moves aren't happening in isolation. They're actually speeding up the shift to a more complex, multipolar global financial world. So the big question you should be asking yourself is this: is my strategy ready for this new reality? This channel will bring you practical knowledge to navigate business, investment, culture, economic trends, and communication tips in trades with China. You know, your comments really encourage us to realize our video's value and update more useful information. Please press like and subscribe now for actionable insights and win-win solutions. Don't miss the possibility to understand and make money in trades with China.